Hey everybody, I'm Ian Lobas, and on today's video, we're going to be talking about the closing disclosure. We're also going to be talking about things to check on the closing disclosure. A lot of people ask me, what is this thing? What should I do with it? And I actually recently read an article from National Association of Realtors that said over 50% of the agents that they polled found something wrong on the closing disclosure. So let's talk about what should you be looking for and how do you protect yourself. So what is the closing disclosure? Simply put, it's a form outlining the terms and costs of your mortgage. And one of the most important pieces of paperwork to check before you actually close on your home. So let's dig into it real quick. So by law, now your lender has to provide you, if you're a buyer, has to provide you with your closing disclosure at least 3 business days before closing. And that day, obviously, closing is when all the remaining paperwork is going to be signed up and you get the keys to your house and everything's good. So remember that 3 business days before your scheduled settlement, you need that closing disclosure. So let's go over to the things that you should look for and check over against your good faith estimate and your loan estimate with your mortgage company before you actually settle. Right? What should you be checking for when you're looking at your closing disclosure? Don't always trust the agent because they might not know what to look for. They might not know what your mortgage is or some of the specific numbers that you talked about with your lender or with your title company. So here are the things. So remember, federal regulations, 3 business days prior. We see it all the time going over from title companies and lenders that don't get them. Like, it used to be a day. Now it's 3 days because you got to have enough time to review it and change things that might not be right. So let's get into it. First, I know it sounds stupid, I know it sounds silly, but the spelling of your name, even minor misspellings can create big problems later. So remember, the way that your name is spelled on your closing disclosure could be the way that it's spelled on your deed and the title to the house. So you definitely want to make sure that your name is spelled correctly. Number 2, the term of your loan. Do you have a 15-year loan, a 30-year loan? So be sure to check on the term of your loan. Again, if you took out a 15 and it says 360 months, that's not right. And vice versa. If you took out a 30 and it says 15, definitely want to get that changed. Next thing to check is your loan type, right? So we talked about it before. There's FHA, there's conventional, there's VA loans, there's adjustable rate, fixed rate, there's all kinds of different variables. So make sure that you pull out your good faith estimate that you got from your mortgage company early on, and you're comparing it with your closing disclosure that you have now 3 days before settlement. Now, in the event that you change some things, obviously, it's probably not going to match up, but you should have an updated GFE at that point. So again, loan type, definitely check that out. Next thing, interest rate. So again, on the docs that you got from your lender, as long as your rate is locked in, which it should be, it should remain the same. And you definitely want to make sure that what you expected it to be, if it's 4.5 or 4.65, if it doesn't say 4.65 on your CD, make sure you're telling your agent, make sure you're calling your lender and getting that changed. Next thing that we're going to talk about, you need to check out is your cash to close amount. And what do we mean by that? That's how much money you need to bring to the table to actually close the deal, including your down payment, your closing costs, and a little bit more, and we'll actually cover that in the next one. So now, after that, closing costs, making sure that your closing costs are correct based on your loan estimate. So these fees are the ones paid to third parties, such as the appraiser, the underwriter, the title company, attorneys, those kind of things, to facilitate the actual sale of your house. So if there are significant changes from your loan estimate, you definitely need to let your lender and the title company know. In the event that they are different, your lender can explain why. But traditionally, let's say typically, in general, we'll use all those, home buyers can expect that the typical closing cost amount, and again, it varies from state to state, but in general, 3 to 4% of the value or the sale price of the home is traditionally what you can expect to pay as your closing cost. Next, your loan amount. And I know it sounds weird because you locked in, you knew your down payment, you know your closing cost number. But if your loan amount has gone up, definitely check on that. But there are a couple things and a couple reasons why it may have. So maybe you decided to roll closing costs into your loan amount. Maybe there's other things that you put in your loan amount. Maybe there are, what's called a seller concession, where the seller helps the buyer with closing costs. And instead of paying $350, you paid $355, and you ask that seller for that $5,000 back. So now, obviously, your sale price has gone up. Your loan amount's going to go up. The $5,000 will be applied to your closing costs. And so, obviously, between your loan estimate and what you're looking at now, things have changed. Again, it's something that you had organized with your agent, negotiated with the other side, but definitely want to make sure you keep that in mind. There's a lot of variables and a lot of spinning plates when you're going to close for a home. So you definitely want to have something, a nice organized sheet where you can compare everything and know that you're paying the right amount that you agreed to. Next thing, estimated total monthly payment. And again, this is an estimate because your monthly payment can change over time if your interest rate is adjustable. Obviously, your total monthly payment is going to change if your interest rate changes, for sure. And then the last thing is going to be your estimated taxes, insurance, and other payments. This amount also can change over time. Let's say if you have property taxes that go up, HOA fees that go up. Also, remember, with private mortgage insurance, that could be a year, 2 years, 5 years. I mean, it all depends on you and as a specific borrower, but the PMI is not going to change, but it's something that you could take off at a certain point when you refinance, or however your lender wants to do it. So definitely pay attention to those estimated taxes, insurance, and other payments such as HOA. So if you're a first-time home buyer, or this is your first time purchasing a home after August 2015, when the CD was sort of enacted, and federal regulators made it, that the rule, there are sample CDs that I can send you. So if you want to see one and you just kind of want to understand what that looks like and what you should be looking for, and if you're starting the process now or in a while, not a problem. Shoot me an email, text, private message. I'd be happy to take care of you. So as always, I really appreciate you watching this video. I hope it helps. I get these questions all the time. So all the videos that we shoot are because that's the huge amount of people that are asking me the same question. So I hope you find this helpful. And if you do, please feel free to share this with all your family and friends out on social media. And then as always, if you have a topic that you want me to cover, shoot a video on, or even if you just want to discuss it over the phone or email, I'd be more than happy to. So reach out anytime. Again, as always, thank you for watching the video, and I'll see you next time.